Hello and welcome to another Smaulgld live stream. It is Tuesday, the 21st of May, 2019, and that was Crypto Street by Mark Battaglia, another new Smaulgld introduction music. Yes. Well, we want to thank Mark for that killer piece there. I really enjoyed that. A little bit of funk added to our Tuesday evening. Tonight's topic is 60 Minutes featured Bitcoin the other night, and controversy ensued. We're going to talk about that. We've got a lot of adoption stories on crypto. Got some market stories, so we might as well get right into it. Lots to catch up on. In the markets today, the stock market had a pretty nice day, gains. All the indexes rising about 1%. Dow Jones up to 25,877, still below 26,000. NASDAQ up over a point to 77.85, S&P 500 to 28.64. The dollar index pretty much soaring to 98.02. It's gold and silver were flat. Gold at 12.73. That was down just a little bit, and silver was flat at 14.44. Palladium holding steady at 8.15, and platinum holding steady at 8.15. Palladium up to 13.05. So palladium has held above the gold price now for a few months, which is quite an achievement given that palladium is usually trailing both platinum and gold, and yet palladium is so far the winner in 2019 of the precious metals. All right, let's take a look now at some of these. So why don't we start out with the 60-minute story, because Peter Schiff has been in the news a lot, defending gold against all comers, and he took offense to the 60-minute show that was on. I don't know if anyone has seen it. I'll tell you what it was about, and then we're going to get your thoughts on what the big hubbub was about. But 60 Minutes ran I don't know what the point of it was, but they had the show on cryptocurrency, specifically Bitcoin. And they had a number of features in the show. One was they had interviewed the guy who had purchased a pizza for $10,000 back in 2000 and I think it was 10 or 11. It was supposedly the first known purchase using Bitcoin, and they'd calculated that if he still held on to those Bitcoins, it'd be worth $800 million. Interesting, but it's not really the story of Bitcoin. Another good portion of the show centered around a guy named Charlie Shrem, and they showed how he was a Brooklyn kid, early 20s. He cottoned on to Bitcoin, and he started a business with an exchange, and he obviously didn't know what he was doing for anti-money laundering, know your customer requirements, wasn't really paying much attention, and he got arrested for there was a bunch of things he had done wrong. He describes it in the show, and basically that story is gone. And then they ask another segment. They ask some woman, what is Bitcoin? And she tries to explain it. Now, I did not really think it was much of a show at all. If you didn't know anything about Bitcoin, it didn't really tell you that much. Most people who watch 60 Minutes, if they're not interested in Bitcoin, they have a passing understanding of what it is. I don't think they learned anything. There was nothing in there that would make you want to go out and buy Bitcoin. It wasn't saying that this is the greatest thing. It didn't have any forward-looking information about what's happening in the space. It just mentioned these are things that had happened, and it was almost like it was a historic curiosity. I didn't think of it as, wow, people are going to go out and buy Bitcoin now because of this. And I also didn't think it told people that this is some scary currency that everybody's got to be worried about. Although there was somewhat of that in there, because what happened to this guy, Charlie Shrem, having gotten arrested. And for most people, casual users of Bitcoin, they probably know two things: is dark web, illegal use, and then the big bubble in 2017. I think those are the things, and I don't think that this show on 60 Minutes really did anything. And in my view was that the Bitcoin show could have been done 4 years ago. They didn't make any mention of the things we talk about on this program, about institutional interest, about how Fidelity and Bakkt and TD Ameritrade, E-Trade, Schwab, all the companies are getting involved in trading of Bitcoin, the size of the whole market, the CME futures, and all the billions invested into the space, merchant adoption, number of hodlers, transactions, and the Bitcoin ETF pending. I mean, those are the current things that are occupying at least the analysis here, and people who are following the space. It's more up to date. I mean, Charlie Shrem really is yesterday's news. It's really 3 years ago's news. It's not really that interesting to me. And because since then, we've had countless institutions have set up properly run exchanges. We've got bit licenses where they have to meet all types of requirements. So they're really covering it as if it was 2013, 2014. So that was my view on it. Now, Peter Schiff, though, did not take kindly to it. He thought it, well, I'll let you read what he said about it, which I'm not quite sure why he was so upset about it. But the first comment he made, he said, 60 Minutes just aired a free commercial for Bitcoin, which anyone who watched it, I don't think it was a free commercial. Great press for Bitcoin owners looking to sell the CBS viewers who may be suckered into buying based on this very one-sided segment. I don't know what one side it was other than milk toast. I mean, on both sides, I didn't think there was anything in there one-sided that was telling people, hey, there's some bag holders who want to unload their Bitcoin on you, 60-minute viewers. At a minimum, CBS owed its audience a healthy degree of skepticism. By showing a guy who got arrested for operating a Bitcoin exchange, I think that's enough skepticism. Very bad reporting as usual. Then he goes on, a little later on in the day, we'll skip his comment on Pete Buttigieg. The worst thing about Bitcoin is after millions of people lose billions of dollars, the libertarian cause for sound money will suffer a major setback. Now, if he's really worried about that, he might go back to 2011 when silver was $50 an ounce. And presumably, millions of people bought silver, sound money, and it dropped to $14 over the next 8 years. Now, it doesn't mention that, but I don't think that is a setback for the libertarian cause. And I'm going to talk about libertarianism as well, because China is not a libertarian cause, but we're always hearing about how China is going to crush the dollar, and China is the best, and the dollar is going to collapse, and end of dollar hegemony, and so on. But he's worried about the libertarian cause, because millions of people are going to lose billions of dollars in Bitcoins. Governments will get more powerful and use the losses to increase regulation on legitimate alternatives to fiat currency. So the only legitimate, I guess, Bitcoin is not a legitimate alternative to fiat currency. If it isn't, I don't know what is. Okay, now, that was his complaint about the Bitcoin show. And it's not finished. He's got some more. Yesterday, he's still thinking that somehow that this 60-minute thing was some type of mega moment in history or something, that billions of people are watching 60 Minutes. They're not. And they're taking away from this that they should go out and buy Bitcoin, and what a disaster this is going to be, because all of the early adopters, 10 years in, that have Bitcoin now, we're just waiting for this opportunity on 60 Minutes so that the people watching 60 Minutes would somehow figure out that night had to go out and buy Bitcoin on the basis of Anderson Cooper interviewing Charlie Shrem in his sandals. And that would be a glorious moment for Bitcoin holders to dump their Bitcoin on these unsuspecting 60-minute viewers. Well, next day, he says the CBS Bitcoin puff piece on 60 Minutes last night has so far produced no upward movement in the price of Bitcoin. And I don't know anyone who was expecting it to, but maybe there'll be a lag, but maybe the recent run-up in price was driven by speculators who anticipated the positive segment who are now selling the news. Well, first of all, before and after the 60 Minutes, the day or two before and the day or two after, Bitcoin's been going up and going down, going up and going down. It's got nothing to do with 60 Minutes. I mean, at best, I think 60 Minutes gets 6-7 million viewers. It's not a global program. I don't watch it. I don't know anyone who watches it. I mean, it's on, and I don't think that segment was an explosive segment in telling people to stay away. I don't think it was in any way designed to tell people to go out and buy. But it's pretty obvious, and if you guys want to see, there's a debate. It's on the Tone Vase channel. The guy's name is Saifuddin something or other. He wrote a book, The Bitcoin Standard, and he debated Peter about Bitcoin, and Peter was flashing his cufflinks and saying you can make cufflinks out of gold, which is true. If you want to watch that, watch it. I don't really like the idea of debating Bitcoin versus gold because I don't think that Bitcoin is anything remotely like gold. I think that Bitcoin was designed as a payment system. Gold was never designed as a payment system. It was a commodity that people liked and then decided they could also trade it as money. Bitcoin was invented to trade as a currency. But in any event, let's take a look further at this because the Bitcoin, I think this Bitcoin is digital, gold is marketing nonsense. Gold is an element, a commodity that later became a medium of exchange. And recently, it's no longer a medium of exchange. It's mostly used for people storing it, stacking it in vaults and as jewelry. Whereas Bitcoin was created as a payment system. And if you remember the Smaulgld money matrix, the one place where Bitcoin scored far higher than gold and silver was in its ease of use, its ability, your ability to transfer it. Obviously, it's hard to lug gold and silver coins to the store, but it's even harder to try to shop internationally or even across state lines on the internet with gold or silver because it doesn't travel as well as bits on the internet. So obviously Bitcoin is a better means of exchange. Doesn't mean it's better than gold, and gold is a different thing. Gold is a commodity, it's physical, and Bitcoin by its nature is not physical. Something's got intrinsic value, something doesn't have intrinsic value. Who cares? They're both good for whatever they're good for, and that's it. They're not, one can't be the other, just as Peter's pointing out. He's wearing cufflinks. Well, Bitcoin can't be a cufflink. But gold also can't travel across borders to buy stuff. Now, you can digitize gold, but that's not gold. That's just digitizing an asset. You can do that with any asset. The properties of gold are physical properties, desirable properties, valuable properties, and Bitcoin has no desirable physical properties. That doesn't mean it's not worth anything. It just means that it was designed as a payment system. So debating them, I don't know what the debate is about, but that's what they like to do. That people want to debate these things. What else do we have here on that topic? Yeah, here's just if anyone's interested. If you've never read the Satoshi Nakamoto paper, first sentence. Bitcoin, a purely peer-to-peer version of electronic cash, which would allow online payments to be sent directly from one party to another without going through a financial institution. That's what Bitcoin is. It doesn't say digital gold, doesn't say a replacement for gold, a better gold. It's got nothing to do with that. It's all about how the protocol will work and how you avoid the double spending issue and you can send, quote, payments from one part or the other without a financial intermediary. All right. Now, we're not done with Peter yet because let's just give you a few more things on 60 Minutes. And then first he tried to say before the 60 minutes that the reason that Bitcoin went up, he wasn't quite sure. He didn't mention China. He didn't mention institutions. He said it's just a bunch of people trading amongst themselves, which they can do at any given point, if that's all it is. He said because there was no increase in Google searches for Bitcoin, that rally that we saw from 5,000 to 7,000 or 4,000 to 7,000 or 8,000 was just manipulation. and he cites Google, the Google trends. Now, I did a search for bread over the past 30 days, and I noticed that bread searches were down 25% in the U.S. in the past month. So why is no one Googling bread anymore? Does that mean that they've lost interest in bread? Makes no sense. But you see, people believe this Google Trends thing because MarketWatch made the same point that Peter Schiff made the next day. No one is Googling Bitcoin anymore. Does that mean they've lost interest? No, you don't need to Google everything you're interested in. If you know about Bitcoin and you hear about Bitcoin and you see it on your Twitter feed, your Facebook feed, you see stories, there's no need to necessarily Google anything. So I don't know why people think that is some type of reliable indicator of interest. But Peter was convinced before the 60 Minutes show that the recent rally from 4,000 to 7,000 was nothing more than speculators because there wasn't real interest. Now, he's not taking it to if you want to use Google, who uses Google? People, individuals, okay? Well, if the price of Bitcoin rose as a result of one of two things. Some people are saying China, people trying to avoid in China getting out of the yuan, getting money out of the country. Well, they're not going to use Google. They use a different search engine, Baidu. Or if it was institutions, as I believe a good portion of it was, even if every institution was looking up Google or somebody in their research and development team, wouldn't drive hardly any numbers into Google. So you can't just look at Google and say that if there's no Google searches in Bitcoin, well, then it must be manipulated. Oh, wait, then 2 days later, it must be because of 60 Minutes. Oh, no, nothing happened because of 60 Minutes? Oh, well, maybe it's because anything to try to deny the fact that the price rose. Anytime a price rises for a lot of people, it's a bubble. It's a bubble. Everything is a bubble. If it goes up, it's a bubble. Anything that goes up, it's got to be a bubble. All right, let me see if there's anything else in 60 Minutes here. 60 Minutes. Yeah, we mentioned that there was no mention of anything current, really, in the 60 Minutes expose. What else does this one say? Yeah, and I didn't see it as an infomercial like Peter did. Here's what I thought it was. I thought it was 60 Minutes putting down a historical marker. They hadn't covered it really before. And if this is me reading into it, but this is my show and my speculation, because I've been saying that institutions are moving in, and the reason they're moving in is because they see a fortune to be made. They saw how the retail people and the YouTube knuckleheads made a lot of money with ICOs. They realized we can get this done right. We put in the regulation, we put in the time, we put in the money. We can unload this to institutional clients, and we can do better with this than we could do with Lyft and Uber and all the other nonsense we've been trying to push on investors. And then I think what 60 Minutes is going to do a year or two from now, after Wall Street issues a slew of products and there's a ton of regulation, they'll revisit the whole Bitcoin space, and they'll show this sharp contrast between Charlie Shrem in his sandals and getting arrested and the guy buying pizza for 10,000 Bitcoin and some woman not knowing how to properly explain Bitcoin, to showing this well-oiled machine and new prosperity being driven on Wall Street through cryptocurrencies. I think that's what they're going to do. There's how much better Bitcoin is now that Wall Street has come in and it's under proper regulatory control. I think that's what they're trying to do. Now, maybe I'm giving them too much credit, or I'm just looking at it. Maybe they don't know they're going to do this. Maybe they will do it. But that's kind of how I see it. I did not see that show as some type of pump and dump as as Peter did. I just did not see that at all. And because I thought that, first of all, 60 Minutes is largely irrelevant. No one watches it. When I say no one, it's not a big audience. And again, it focused on things between 2009, 2015. And it didn't say buy Bitcoin. There was nothing in there that was, to me, compelling that you got to go out and buy Bitcoin. All right. Well, let's see in the comments what you think about that little episode there with 60 Minutes. If you think Peter's right to think that somehow 60 Minutes was designed to drive Bitcoin price higher so that its viewers would buy into Bitcoin. And again, why would 60 Minutes want to screw its viewers over, and pump them into Bitcoin if Peter's right and that's what they think they're doing? That wouldn't make any sense for them to do that. But yeah, leave your comments in. We'll get to them at the end of the show. SMAULGLD if you want me to comment on your comment. Now let's talk about some other adoption issues that have been coming up. A very big one is WhatsApp. Now, I don't know what this is. I never used it, but apparently 1 billion people use this WhatsApp application. I guess you chat with each other, you message to each other. Well, on that app now, you can now send and receive Bitcoin and Litecoin. Now, apparently there's 1 billion people that use this thing. So you don't really need to have many people using this particular feature to have a big increase in users. So it's a bit of an adoption play. That's why I have this under adoption. Well, they say 1.5 billion. Crypto integration allows 1.5 billion WhatsApp users to send Bitcoin, Ethereum too, and Litecoin using the LiteIM messaging bot. And there's a company that arranged that called Zulu Labs, I think it's called. Zulu Republic. And they say they're happy to announce from today you can send and receive Bitcoin and Litecoin on WhatsApp. They don't mention Ethereum, but I think you can. And WhatsApp is a messenger with more than 1 billion people in over 180 countries. Use WhatsApp to stay in touch with friends and family anytime, anywhere. Anyone who's listening, if you use that, let me know how that works. I have no interest in WhatsApp, so I probably won't even bother checking it out. But it seems to be a pretty big development in adoption. Other adoption issues. Bitcoin ATMs now in the U.S. are over 3,031. I think there's over 4,000, almost 4,100 in the world. And I don't think that they sell much of these Bitcoin ATMs. They probably have 2 or 3 or 4 or 10, depending on the particular location where the machine is. A certain number of transactions a day. I'm sure the bulk of Bitcoin buying and selling, some of them dispense cash, do not occur at Bitcoin ATMs. The only reason I report on them is they are a sign of ubiquity of this entering into the mainstream, because if you can go into a gas station or 7-Eleven and they have these types of machines, it's just more a supermarket. Now Coinstar has these machines as well. A good number of them are equipped to sell Bitcoin. And I'm sure that most people who dump coins in there aren't going to buy Bitcoin. But the idea is that it's there and people see it. It's all incremental. It's just part of adoption, that you're never going to be too far away from your ability to transact or interact with Bitcoin if you so desire, either from some app on your phone, the Cash app, the WhatsApp, the Coinbase app that you may have downloaded, or going into a store and having a Bitcoin machine or a Coinstar machine, or a merchant that may be accepting cryptocurrencies through BitPay or any other payment processor. Speaking of Coinbase, Coinbase is now in 100 countries, which is a lot. And they're doing this, it's kind of a pump. They have a bunch of altcoins, BAT and XRP and XLM or Stellar, whatever they're called. All these different altcoins. And they're offering this program where if you answer a bunch of questions after you learn something about them through these little videos, they'll give you $50 worth of each of these altcoins. And they're having this in 100 countries. So it's a bit of an education, but it's also a bit of a spreading out of this kind of, it's a seeding of these altcoins. Yeah. It's called Coinbase Earn Now. And they say it's available in over 100 countries. By the way, Coinbase also is looking to buy AXAPO, which is a vault. It stores cryptocurrencies. It's Hong Kong based, but it has vaults in like the mountains of Switzerland. It's military grade style security. And apparently, Fidelity is interested in it as well. This custody business is a big deal in the cryptocurrencies as well. Processing fees. Let's see. What do we got in process? Well, this is Johnny Litecoin. He's on the show once, and he's also been in the comments a few times. Here's a company. This is incremental. It's not going to change the world, but it's a company called Luscious Curtains, and they're accepting Litecoin. It's probably a New Jersey company that John went to and got them to accept Litecoin. But he makes an interesting point. He says, I would rather turn my Litecoin gains into real goods and services than selling on an exchange. That's a very important point, not just from his personal preference, but it actually, if you make money in a stock, or you make money in gold or silver, or you make money in art selling, or you sell your house, you can't really convert the proceeds directly into then swapping them for goods and services. It has to be converted into cash. So if you sell your Apple shares and you're on your Schwab account, you then have the proceeds go to your Schwab money market or whatever you have. Maybe you have a stable coin at Schwab. And then you have to, if you have a check, I don't know if they have checks at Schwab, you can write a check. Otherwise, you then have to transfer the money from Schwab to your Chase account, and then you can use your debit card. There's a lot of steps there from turning your Apple profits or losses in your stocks into being able to spend them. But if you have your Litecoin, as he's saying here, and you have it on your Loaf wallet on your phone, you can spend it directly. So if the price goes up, like it did, fourfold from December when it was $22 to $88 or higher, where it is now, what John is saying is now, if he had $100 in Litecoin, he probably couldn't buy much in the way of curtains, but now he's got $420. He can go buy the curtains. He doesn't have to sell the Litecoin on the exchange, wait for the money to get to his bank account, and then spend it from there. He can spend it directly. And that ties into actually how I think this is why this could be very stimulative to the economy if this type of transaction velocity picks up, meaning that people make money and they, rather than save it, cash it out, they just spend it. And as I was mentioning, that if they were to do this type of spending and make it tax-free, then there would still be no tax losses because the merchants would end up paying taxes on the profits that they make. The other thing is, there's a reason, not just because merchants want to get that money, but also, the additional increase that someone like Johnny might have made on a fourfold increase. He's got a windfall. The merchant wants that money. They're all fighting for it, and that curtain company is going to get it as opposed to another curtain company. It was reported by Gemini, that's the Winklevoss twins, that retailers spent $90 billion on credit card processing fees in 2018. And he says that's almost entirely passed on to its customers. Now remember, they're working with a company, Flexa, with having a spend card, SPEDN. And the purpose of that card is to allow people to spend their cryptocurrencies. So it's the same concept that Johnny Litecoin, talking about is merchants have an incentive to accept cryptocurrencies, not only to get the additional revenue, but also to get the lower, not have to pay the higher processing fee. Now, remember back a few months ago, we had done a show called, back in January, The Lesson of Netflix versus Blockbusters, and we discussed how Netflix didn't win by having a better product. Their product was one, this is before they had their own studio, before they had digital downloads. They were offering VHS and DVDs just like Blockbuster, and you had to wait for them because you had to mail them in. But the key was there were never any late fees. That's really what sunk Blockbuster, was the fee. The customers don't like it. And in this case, the customers in the retail space They don't know that they don't like the high credit card fees because they don't pay them, but the merchants don't like them. And people who do pay with cryptocurrencies are normally getting a lower rate from the merchant. So anyone who buys precious metals from some of the online retail bullion dealers, you'll see they offer a lower price if you pay in crypto. By the way, I got an email today from Gainesville Coins saying that they are accepting Bitcoin now. They think that the payment system is now robust enough that they should be taking it. And then they mentioned that they will be using or accepting Litecoin, Ethereum, and Ethereum Classic, was a strange choice, but in the future, in the coming weeks and months. There's another adoption thing there. I don't think I've ever used Gainesville Coins, but I offered them to come on the show, not to talk about cryptocurrencies, just to have a bullion dealer on. We've had a couple of times on James Henry Anderson of SD Bullion, and be nice to get another bullion dealer on. All right, retailers spent $90 billion. This is Gemini on credit card processing fees in 2018. So using cryptocurrencies can really knock that number down. All right, what else do we have? Anything else? Now, there was something in Australia, I think I have the thing here, where they have a ruling now that if you spend your cryptocurrencies and you have them and they're not for investment, they have this strange test, then you don't pay tax. And I think the number's up to $10,000. And that was one of my stimulus package ideas, was to come up with something like that. That if you're using the cryptocurrency, no different than if you had, when you go to Europe and you take out British pounds and the dollar is stronger than the British, you don't pay tax on that difference. Here is the Coinbase Visa card. We had mentioned the spend it card from the Gemini people. But once you start moving, this is another one of not my ideas, but I guess it's an idea, that cryptocurrencies, rather than having that original Satoshi vision of peer-to-peer, no financial institution dream, realized, you can still do that with Bitcoin, but we're seeing more of this kind of stuff. We're putting Bitcoin right back into a middleman situation. That's what Spend Card is. That's what the Cash App is. That anytime you put cryptocurrency on a Visa card, you're using the intermediary. Now, using the intermediary is a way of the intermediary protecting its market position. Just like what Microsoft did with Windows. They just added, rather than allow everyone to move away from Windows because they were moving to Netscape and browser-based .com type of interfaces, they just added on and gave it away for free, the Internet Explorer, and that brought everybody back into the Windows fold. I since lost that with Chrome and Firefox, but the point is that these institutions realize it's a lot easier to try to grab as much of the crypto exchanges between people and subsume it into the payment system, because they know eventually if crypto takes off, they're going to lose that big fat profit margin they have on charging 2, 3, 5% fees. They might as well at least grow this portion of it while they're continuing to gouge the 2 and 3.5% on the other stuff. So you're seeing a lot of these types of cards coming out, these Visa cards. There's one called Block Card. There's this Coinbase card. There's many of them. And we mentioned WhatsApp. What else do we have here? Coinbase, Litecoin, Bitcoin, ATS. Who owns Bitcoin? Now, this was a very interesting. Very, very interesting. Because you really don't know. Now, this person says there are 732,000 Bitcoin addresses that own at least one Bitcoin. Now, one Bitcoin, that's a lot because it's worth $8,000. But it's not a lot that 732 addresses have them. And I would imagine that of the 732,000 addresses, there's got to be people who have more than two. And there's got to be institutions that have more than two. So I would say, if you just look at individuals, my guess is, at best, half number. I would say there's 350,000 people that have one Bitcoin. It's very, very little. Now remember, there's only 21 million Bitcoin, so it's not that strange, but it does give you an idea of the size of the market. Yeah, and this is the one who says how many people own more than one Bitcoin. Now it's interesting, more people today own more than one Bitcoin than did back when, so there is somewhat of a spreading out of the Bitcoin, but still very, very small number of people that own. And then in some of those addresses, I would imagine there's going to be, well, I don't know this. I don't know how they do it. But what I'm talking about is when the companies exchanges put their Bitcoin in cold storage, I don't know if they put them on one address or if they break them into many addresses. Well, we know those addresses are going to have more than one Bitcoin on them as well. All right, what else do we have here? The other interesting thing on adoption is this Litecoin approach. They seem to like fighting. They have this one with a glory kickboxing. You can see, I don't know if you can see it, but they buy a position on the floor, on the mat that says Litecoin. They did it with the UFC too. I think that's what it's called. Some type of mixed martial arts fighting, so they believe. And they sponsored some type of Korean teen pop or something. Yeah, here's the other guy here. UFC. Ben Funky Askren shills Litecoin. So again, it's almost like during the .com era when you started seeing, although the Litecoin Foundation isn't as big as some of these companies, which is the difference. A foundation is not the same as a company. But when you saw in the late 90s, early 2000s, where they would buy, like Pets.com would sponsor big things, and I'm trying to remember, it's 20 years ago. I think you had McAfee Stadium. There are all types of internet companies that were spending a lot of money getting their name out. All right, what else do we have? All right, let's move on now to institutionalization. What we mentioned before, I just happen to have it here, is Coinbase looking to acquire Expo, the world's one of the first and most well-regarded Bitcoin storage places. That's institutionalization. But this one is pretty stunning if you think about it. Coinbase custody, which doesn't yet include Expo, however you say it, they launched it 12 months ago. They have $1 billion of crypto assets in there, which I think is quite amazing. And they only have 70 customers. So think about that. There's 70 customers with $1 billion worth of crypto assets. Now, we don't know if it's one customer makes up the bulk of that $1 billion. Doesn't matter to me. I mean, $1 billion divided by 70, you're talking lots of money. Even if it's one customer, $1 billion in crypto assets held in a custodial arrangement by Coinbase. You could see why Wall Street wants the custody contracts, storing this. This is one of the big holdups in the Bitcoin ETF. We're going to get to that in a sec. They didn't approve the most recent Bitcoin ETF because they're still concerned about custodial arrangements, and we'll get to that in a sec. Now, here's another one, Bulgaria. They have 200,000 Bitcoins they got from a criminal gang in May 2017. Now, the U.S. government had some coins they collected in 2014. They've sold them 2014, 2015. But this hoard is massive. This is, first of all, 200,000 coins is like, there's only 21 million in the total thing. But the point is that 200,000 coins is worth, what is it worth? $160 million? Well, let me tell you what it is. 1,000 times 20. What's 200? Yeah. Yeah, it's $1.6 billion. So that's a lot of cash for Bulgaria to have 200,000 coins that they seized from a criminal gang. And some say, it's in their treasury, so it's similar to being at their central bank. And finally, there was this. This was interesting. The New York Stock Exchange owner, Intercontinental Exchange. This I also got in an email because I'm signed up for it. It's not like they want me to cover it. ICE cryptocurrency data feed, boosting transparency in the crypto markets. The reason this is interesting is not just because it's the New York Stock Exchange promoting the different prices of the different cryptocurrencies and in the different fiat currencies, so they show the pairs and trading pairs and so on. But it's that they're trying to, quote, boost transparency. Now, the reason for that is another reason that the Bitcoin ETFs are not being approved. There are two issues. There is the transparency and the available market information and whether there's enough market surveillance to figure out whether there is manipulation in the markets, and then also the custody arrangement. And obviously, ICE, which owns New York Stock Exchange, which is part and parcel of getting backed, BAKKT, their venture with Microsoft, Boston Consulting, and Starbucks aboard, where they have a physically delivered Bitcoin futures contract that also involves storage. That's why you can see they're all working on this to satisfy the regulators. Now, the reason regulation is very important is not just because it helps customers and it makes sure that everyone is on a level playing field and you feel comfortable. Yeah, there's that. But the reason that these big companies like New York Stock Exchange, ICE, NASDAQ, Fidelity, Goldman Sachs, JP, whoever's involved in these businesses, they may complain and moan about regulation at its owners and so on, but they actually benefit from it. Because once they get past all those hurdles, once they buy their bit license and they keep in compliance, only they can do that. That was my point. Charlie Shrem from his basement in Brooklyn can't do that with his bar mitzvah money. That's how he started his business. I don't know how much you get in a bar mitzvah, but I don't think it's tens of millions of dollars to engage in just compliance before you get started. I'm sure what he did was he just set up whatever technology needed to set up his trading platform, and he started trading. And then he thought about the regulatory issues later. Well, that makes sense for entrepreneurs, but for these big companies looking to get into cryptocurrencies, they're going to look to get into it from the regulatory standpoint first before they start doing any business. And again, once they establish themselves, then it's very hard for anyone else to come along unless they're going to raise a lot of money themselves and so that they can do it. Well, what do we have now on regulation? We mentioned the Bitcoin ETF, the Van Eck one. This is Gabor Gurbach. He's the Van Eck guy. And they're working with CBOE. So these are two huge companies, CBOE, Chicago Board of Futures, and then Van Eck, one of the largest ETF companies. The fact that they're pushing this, and they're getting shut down on the custody, shut down on the manipulation and the surveillance. But it's been postponed. It hasn't been rejected. They've got till August 19th to reject or amend or extend again. And then the final date for approval of this is October 19th. Now, by then, you may have backed up and running. Fidelity will probably be up and running. ErisX is already up and running on the OTC side. So I think once the larger players are all up and running, the ones that are spending the millions of dollars to buy all the licenses and get all the approvals, then I think they'll approve a Bitcoin ETF because those entities will be the ones running the markets. Again, this is my Wall Street takeover concept. It's not the small players. It's the big ones. And they work in tandem with the regulators, the CFTC. I mean, they approved the CME Group's Bitcoin futures. Now, the New York Stock Exchange. This is not small potatoes here. They've submitted a proposal for an ETF that includes treasury bills and Bitcoin. Now we'll see. We'll follow that one and see where that one goes. But clearly, there are dozens of these things out there from all the major entities trying to get a Bitcoin ETF. Speaking of regulation from the Americans, one of the issues, as I mentioned, when people just say crypto is all going to zero, they don't know what they're talking about because there's cryptocurrencies, there's tokens, That's like saying all stocks are going to go to zero. It doesn't make any sense to say that. Certain tokens, crypto tokens, reflect ownership interests in businesses. So to say they're all going to zero doesn't make any sense, because some businesses will fail and some businesses won't. Just because they're crypto doesn't mean they're going to fail. That's like saying if you back a cryptocurrency by gold, well, that's going to fail too. Why? It's backed by gold. Why would it fail? Just because it's a cryptocurrency. Well, it's the same with a company. A crypto token that's a company isn't necessarily going to fail just because it's a cryptocurrency. But putting that ignorance aside, one of the problems with issuing a token that is akin to a security is that under the U.S. securities laws, that security either has to be registered or you have to claim an exemption. And generally, exemption is that you're selling only to sophisticated investors that meet certain requirements. Well, Poloniex, which is owned by Circle, which is owned in part by Goldman Sachs, has an issue. They have a bunch of non-regulated tokens, meaning that I don't know which ones they are, but apparently the SEC thinks that they may be tokens that you just can't sell to the general public without registering them, and none of them are registered, and therefore Poloniex could be in violation of the securities laws. So these laws only apply to U.S. citizens, so Poloniex has to ring fence its trading, and if they have their proper know thy customer information in place, they'll know who the U.S. customers are, and they'll put up a big block. No, you can't buy Joe token or Mary token or whatever the token is, because that one might be deemed to be a security and you're not allowed to buy it unless it's registered. It's not registered. Now, that actually is good news for cryptocurrencies that are deemed not to be securities, such as Bitcoin, because there is no Bitcoin company. There may be other reasons why Bitcoin would go down, but most likely it's not because the SEC is going to say it needs to be registered, because there's no company to do the registering. So that's why they approved the CME futures, because they deemed it not a security. It's being deemed as a commodity, which I disagree with, but for legal purposes, it's clearly not a security. And if you have to regulate it somehow, they give it commodity status, even though I think it's a payment system. But it doesn't matter. It means that the CME group, the CFTC, Commodities Futures Trading Commission, they can regulate Bitcoin, and they're the ones who said it's okay for the CME group to issue Bitcoin futures, because Bitcoin is not deemed to be a security. However, the reason that's good news for Bitcoin, and it's not investment advice, it's just in general, there could be other bad things about Bitcoin, but for this particular purpose, it's good for Bitcoin because it removes 9 potential competitors for investment dollars, because these potentially unregistered tokens that need to be registered are not going to be allowed to be sold to Americans. So Americans looking to get into something in the cryptocurrency won't. Bitcoin's not going to compete with those 9 tokens. It's always the case. Regulation favors the big one. Now, in this case, it's not favoring Bitcoin because it's the big one. It's that Bitcoin is not established in the same way in a legal structure like these tokens are. And let's see, Poloniex. Yep, just reminding everyone, Circle owns Poloniex and Goldman Sachs owns part of Circle. And here they are bemoaning the fact that they cannot, or that they have to geofence some assets in the United States. They're deeply frustrated. Well, they should have known better. I mean, that's common knowledge that securities have to be registered. I have your note. Well, digital tokens that might be considered securities and requiring registration under the Securities Acts will be pulled. Removal of these assets means less competition for cryptocurrencies like Bitcoin, Litecoin, Ethereum. There's a difference between a cryptocurrency and a crypto token. A currency is not a security, generally, due to the decentralized nature of it and so on. There's a bunch of tests that apply, and a decentralized currency is different than a token, which is more akin to a security, where you're trying to make your money on the basis of what the company is doing. And here's that Australian tax ruling we're saying that if you have cryptocurrencies as a personal use asset rather than as an investment, you wouldn't have to pay taxes. But it doesn't, it gives guidance, but I mean, there's probably a lot of circumstances where you say, I'm not investing, even though, there's a facts and circumstances test. So for example, if you bought cryptocurrency one day in your wallet in Australia, you bought like $300 worth, and 3 days later you went to the store and it had gone up to $350 and you spent it, you have a good argument that's a personal use asset. But let's say you put $3,000 into it today, and then 3 years later it's $10,000, and then you buy a car with it. One could argue that that is not a personal use asset because it's already $10,000 and that's their limit, but also because you held it for 3 years. So it almost seems like an investment is something you put away for a few years. You don't spend it. But I think I read the guidance and I thought it's almost, they can tell you if they want, no, that's an investment and you have to pay tax on it. And it doesn't seem to be, other than the most easiest cases of something that's a small amount and you held it for a couple of days, could you probably get away with it. If they wanted to charge you and say you have to pay tax on something, you held it for a few months and it's $5,000-$6,000, I might say, nah, it's an investment and you got to pay capital gains. But I do think it's a somewhat of a step in the right direction. As I mentioned, if they did do something like that, that would be very stimulative for the economy. What's this travel rule? No, we don't talk about that. Oh, another interesting thing about Tether. One of the big concerns about Tether was it didn't have the dollars to back it. And they found that actually they did have the dollars to back it, but that the company that owned it, Bitfinex, had sent the dollars for some other reason to some payment processor in Panama. But putting that aside, not only did they admit now that they're under this big investigation in New York, but that Tether wasn't just backed by dollars, but they also had Bitcoin backing it. Now, I'm not sure why they had done that, but it's interesting because I guess if they want to keep the value of Tether, they probably hedged a little with Bitcoin in the pool there. And that's another reason you see Coinbase and Gemini and all these other companies that have New York Bit licenses, their stable coins have audited and FDIC-backed dollars backing their stable coins. And Bitfinex has got this weirder relationship with a Polish bank, and they send stuff to Panama. And that's a big difference, and you could tell the New York Attorney General is probably more interested in not just regulation, but protecting its own entities that have bought the Bit license and comply with what New York requires, whereas Bitfinex is flaunting the fact that they're not going to get a Bit license and they're outside the jurisdiction, so they thought. All right, what else do we have? Anything else? I think we probably got a few more things. Yeah. We got... There was something I wanted to mention about this 60 Minutes thing that I thought was... Yeah. We'll leave it at this. I mentioned that a lot of libertarians, of free market people, they're always praising China, which is the least free market economy in the world. And that's central, top down. Oh, but it's like capitalism. No, it's not. It's a surveillance state. They watch everything you do. They plan out everything. If the economy goes wrong, they intervene. Well, the United States does that too, but not to the same extent. The pretext in the United States is that the United States is a free market. Not that it's a perfect free market. Not that any country is perfect. And this is not a bash on China, but China is not a free market economy. But yet libertarians, some of them, like to talk about China like it's the promised land, which makes no sense. And most of that comes from just the adoration of gold over free market principles. But we also see it. If you truly are for the free market, there's no reason to be against Bitcoin. You may not like it, but like I don't like it. I still don't really like it. I don't like digital things. I prefer LPs and I prefer tangible items. But I don't create the market. It's the same with when they sold that rabbit for $80 million. I don't like it, but if someone wants to pay $90 million for a tin rabbit, let them have at it. What do I care? But it bothers people, and they claim they're free market, but only when the free market agrees and allocates capital the way they would allocate it. So, for example, Peter Schiff is totally against Bitcoin. Why? Now, we know why, because he sells gold and he views it as competition. But if you were truly for the free market, if people want to put money into Bitcoin, that's where they put it. And I remember reading a Mises piece, not Reese's Pieces, but Mises Pieces. He was talking about how during his time, you had the highbrows back then too, complaining that in a bookstore, the books that sold were all the smut of the day, the smut peddlers. They weren't selling the Tolstoy and the highbrow stuff. They were selling, dime store novels is what they were called. Little trashy vignettes, and that's what people want to read. And Mises took the point of view that that's the market. Now, same with music. The market for the most sophisticated music, opera and symphonies, that has to be subsidized because no one goes to see that stuff. I mean, when I say no one, the market for that, the number of people that want to go see Philharmonic and that kind of stuff is limited. And yet, the production in that is very expensive to get people who are going to practice and give up their life to play Mozart's 40th Symphony and another piece 3 nights a week. I mean, that, and the orchestra's got 90 to 100 people in it. And then you get some rapper with a scratch table, and he's going to churn out millions, and people want to see that. And you could say, well, that's not right. When people make these value judgments, they're missing the point. It's not your values or society's values. It's what the market wants to buy. It's just like Bernie Sanders. Oh, the teachers should be getting paid more than the baseball players. No, they shouldn't. The baseball player has a unique talent that people will pay to go see, whereas school teachers, people are forced to send the people to school to teach. So why should property owners have to pay more taxes to pay teachers more? They don't want to pay the teachers more. So the point is, back to Bitcoin, is if you don't like Bitcoin, then you don't like Bitcoin. But bashing it is not libertarian. It's mindless and ineffective. It doesn't make a stitch of sense because I wrote here, Mises realized that free markets may often make choices that you don't like. Like dime store novels are outselling literature. So what? That's what the market chooses. And free marketers don't bemoan such choices. So if you think everyone's an idiot for liking Bitcoin over gold, go ahead and believe that. But if that's what the market is, the example I like is, I have it right here in front of me. I should take a picture of it. I still have it. I have a Sansa disc player. It's a little MP3. It was cheap. It was cheaper than the iPod Shuffle. It's got a screen on it. It has an FM tuner. It has, you can put voice recordings on it. You can link it to a downloadable, like Napster or Rhapsody or something like that. It has different settings, and it has a screen where you can see what you're playing. And it was half the price of the iPod Shuffle, which you couldn't see anything on the thing. You had no idea what you were playing. You could not, there was no radio, there was no voice recorder. There was no way of changing the bass settings or the treble settings. And yet that's what people liked. Now, I can think they're stupid for liking that. I can think that they should be buying the Sansa, but they don't. So, what am I supposed to do? Go on YouTube and tell everyone how stupid they are for buying a Apple Shuffle? There's no point in that. Anyway, my point is that bashing Bitcoin is a fool's errand. if you don't like it, now I can understand if you are a central planner, if you're a Robini or a Stiglitz or a Krugman, and it threatens your job, and you don't like money that you can't conduct monetary policy with, then I can understand it. But if you're saying you're a libertarian, you're for free markets, you like to say consumer choice, and then you bash Bitcoin all day, why? It doesn't. It to me, it's contradictory towards believing in free market principles. All right, let's see what you guys are saying in the comments. All right, I got some comments here. Pablo is here, as always. DW. Mark Battaglia. Do any of these silver gold pumpers ever say sorry, acknowledge that they lost themselves? It cost a lot of people a lot of money with their false narrative. Never a bunch of crooks, really. Yes, but we're concerned that if anyone loses money in Bitcoin, well, then that's going to destroy the libertarian philosophy forever. I don't understand that one. Ann is here. And by the way, Mark, thank you for the music. You know what we're going to do while I'm scrolling through these comments? Since this is a new song, and you guys may have missed it at the beginning, we're going to play Mark's original composition. This is a funky track. It's kind of like a 70s Parliament sound. It's called Crypto Street, and here she comes. There it is, Crypto Street by Mark Battaglia. Thank you for that original music there. All right, you guys are talking amongst yourselves. We'll let that go. Pablo. Anderson Cooper. This is Pablo here. Anderson Cooper did the interview, Marketing Perhaps. Anderson Cooper should come on Smaulgld live and talk about mugs for diversification. How about mugging for life? Yes, mugging for life. We mugging for truth. All right, what else do we have? Mark Kearney, Smaulgld. Do you think silver is in a bubble? Nope. I actually think silver is either fairly valued, undervalued, but it is definitely not a bubble. All right. What else do we have? Ann is hawking Bitcoin and Litecoin on here. All right. What else? The new guy, Silver Rapture. Okay. Jack is here. Not many comments. We have a lot of comments, but none from me. So, if there are no more comments or questions for me, I'm going to turn it over to Bernie. And he's going to give you the famous Bernie 10-second countdown. And before I do that, I'm going to put up the pitch page so I can pump the mugs. You can buy mugs. You just go to Smaulgld.com. You've got all of your, whoops. You got, oh, well, that's not working. You've got all of your ways that you can donate to Smaulgld, which is a good thing. When Lewis asks for money, you should pay him because he's not part of the 1%. And we all need to support Smaulgld because he gives a valuable service each and every night. He even mentions me once in a while, although I don't think Lewis is a socialist. But maybe one day we'll convince him that the 1% got all the wealth and the poor are starving to death. And then maybe he'll realize that if you send him enough money, maybe then he'll pay more taxes. And the more money he makes, the more taxes he will pay. So I'm going to give you the 10-second countdown. But he's looking for the ways for you to donate to him. And it's a sheet of paper that he's going to put up on the screen. And then once it's up there, I'm going to start the countdown, and then you're going to send the money. Or you're going to buy something off from his website. Because when you buy stuff in the links below this YouTube and this BitChute, he gets a commission. And that's a good thing.
And so everything's good when it's involving Smaulgld. So here is the 10-second countdown. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1%, 0. Have a good night. And send Smaulgld some money.